where we have an order block, which you can see the price trades up to it here, here. That red line is what I'm referring to. Here, 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 here. What's going on there? Is that resistance, or is that an algorithm holding price at this level? They're accumulating short positions. So now if we are looking at this area up here and they're shorting that area right here, the order block in itself, if we're using higher time frame, you have to wait for price to show its hand. What does that mean? Does it mean get right in at the order block? Not if it's a higher time frame order block, no. So you wait for time of day. Now we're in a kill zone, London. Wait for price to show willingness to go away, in this case lower, because order flow in the daily chart is bearish. So we're waiting for a displacement lower during 2 o'clock to 5 o'clock in the morning, right here, this displacement right here. Now, right away, you have to look at the up close candle or candles that are consecutive, like this one here, like 1, 2, 3. That would be your order block, your bearish order block. And if it trades back up to it, once it trades below it, well, it does it here. And then do we get a little displacement? Yes, it starts to run. This one has already been used. So as we start to retrace higher, right in here, that candle is what you would be using for your order block. So you have this price run here and then this order block. You want to be looking for a displacement lower, moving away from a higher time frame order block. We've already seen the inability for the price to get above that level, that red level. It's that order block on the daily chart. Price moves away. We have an order block. We trade up into it, and we have a very clear, obvious old low, which is sell side liquidity. So now what we're saying in essence is that we're looking for this area here to be matched up with this area here. So smart money operates under what I teach is market efficiency paradigm. So we have smart money selling short here. Okay, they're selling as people are chasing this higher. Every time it makes a little bit of headway above that red line, buyers are using it as a breakout. They're buying, buying, buying. Who is giving them the other side of their buy? Smart money is selling that to them. If the smart money is short, where's the ideal scenario for smart money to get out? If they are selling to buyers up here, they are going to look to pair their order for exiting that short with existing sellers. That's what's residing below here. Sell stops. So what they're going to do is they're going to sell short here and look to buy it back from willing sellers at a lower price that are just waiting to be tagged. So the market efficiency paradigm is this. Smart money sells, then buys it back from retail traders that have sell stops resting below old lows.